Oh man, haven't recorded a video for a while. It's been just a crazy time. Got a new, better job and just been really busy. But feels about time to do this again. Um, so what you're looking at, this is ustechclock.org. I'm sure many of you have seen this. I was shown it the first time when I was in high school, a long time ago, when it kind of around when it first came out. Um, but it's got your um, the different debts and revenues and holdings per citizen, per taxpayer, etc. I look at this a lot. I typically take a screenshot of it once a month, and I remember I took a screenshot of it at the beginning of the pandemic, and then you compare that to now, and it's pretty insane. Um, but I mean, it's consistent with each president raising the deficit and such because we have existed on a economy that just monetizes debt by decreasing future purchasing power and um, standard of living of future generations, which is pretty insane. It's sad when you think about it. It's kind of like a race to the bottom while you're racing to the top. So it's pretty difficult to, you know, a lot of people are ignorant to the true workings of currency and economics, and that's how the system keeps going. Um, and the problem is if you break it down and you open it up, well, you destroy a system that many people have based their life upon, and now you will hurt those people. So, I think about my parents who, largely don't pay attention to economics, the economic condition. And I don't blame them. Maybe I stress too much about it. But say this system were to end, everything build a life upon um, would kind of crumble, or at least the retirement nest egg and such could crumble around it. So having the large number of people asleep to the conditions of debt and such is in the best interests of the government and many people. It's kind of like taking the red pill, blue pill argument with the Matrix and such. And once you see it, you can never go back. Once you see the lie, you can't go back and you can't really function in that way anymore. Um, so, I watched a really good video. I'll link it below by it's McAlvany Financial about, building generational wealth and compounding assets regardless of dollar price and looking at things in terms of how much can this asset purchase of another asset and what's the ratio and the average ratio. And this is something I'd been interested in before. I had an idea once, I had a dream about this. It was really crazy. Um, it was about building a solid plane or flat plane. So in the foundation of technology, the flat plane is a surface where you say you could take any three surfaces um, rubbed against each other will eventually create a perfectly smooth flat plane, but you have to keep rubbing one against two, two against three, three against one, one against three, one against two, two against three, and surfaces one, two, and three. I mean, so one against two, one against three, two against one, and back and forth until eventually you'll have flat planes, completely flat planes. For some reason, any three surfaces rubbed together will create a flat plane. So I have an idea about, so how do you know, you take the value of you take any three commodities or currencies, or maybe a currency, commodity, and equity, and when you rub them against each other, you create a flat plane. And so you can take uh, commodity A, B, and C, um, and find the 0 point between the two or the three, and then any deviation from the flat plane would show one being overvalued or oversold. Um, and then you could buy it if it was oversold, or uh, sell it if it was overbought, and you could always be working this ratio of different commodities against each other, to always be compounding the amount. So the McAlvany financial guys, they talk about the silver gold ratio, which I like a lot, and I've been actively building up silver due to the ratio, and then plan to convert it over to gold in the future. Um, Maybe we'll see what happens. I may just wait for the ratio to drop and then start buying gold, since according to that metric, gold would be undervalued against silver. I may not trade the silver. I may just buy gold instead and then start buying silver again when the ratio heightens again. Um, I haven't decided, but because I'm not presented with that situation yet. But um, so you got the three planes. Um, this is a work in progress. I don't know if it's going to work, but so you could take gold, silver, and platinum and compare them against each other and find the 0 point in which would, I guess, be the average ratio point over a given amount, a given time frame, 10, 20, 30 years, um, and then somehow add them up mathematically to create that zero bound, and then chart the daily price changes against each one, um, on a chart. So it would be like a new type of technical indicator. Um, so anyone who has any ideas or thoughts on how to flesh this out, it, I've been working on this idea has been kind of growing on me for the past, man, it's been 7 years since I first started really thinking about the cyclical waves of commodities and seeing those on a chart versus other goods. Because my early investment days were dominated by, dollar idea, the price of this equity versus the dollar. I knew what inflation was, but I had no real concept of what inflation was and how it actually affected things, and how the nominal price of a good could go up, but my purchasing power could go down against another basket of goods. So what is the benefit of an investment, right? If the nominal price goes up, but you can purchase less of the goods you need in the future, you've lost money. And that is the insidious part about the way our dollar works and the national debt works and the derivatives market works and Social Security works. It's a crime. Um, it's a crime. It's a lie. It's a big Ponzi scheme. When you really look at how it's built, it's a big Ponzi scheme. So I encourage you, get off the dollar, get off all these currencies, and only think about what is this worth against a basket of commodities. So what I've done is I have purchase price of different investments and how much a bushel of wheat cost that day, corn, pork, coffee, um, cattle, beef, all that stuff, so that I can see, has this increased in value against these goods or not, right? Because that's what I need in the future, How much has my house appreciated against the cost of these other bundles of goods? And does it make sense to sell this asset today? Has it actually gone up in value or not? And if the nominal price in dollars goes up by 10%, but the cost of all these other goods also goes up 10%, well, then I'm still at the 0 point, and I haven't made money, I haven't lost money, but um, it's not worth selling at that point unless I'm pretty sure it's not going to go up anymore. Then I just take the L and then leave. The L is the capital gains tax I now have to pay on the quote unquote profit, even though there's not much profit. So another thing to think about when you're investing. I mean, really, I think the only way to do it is comparing your commodity purchase or equity purchase against a bundle of other goods now, given the fact that our dollar and our economy has pretty much gone completely haywire and unhinged. Um, that's going to be the way to do it. And that way, if the dollar does seriously lose um, purchasing power and or seriously um, it could go away. We could get a new currency and we could be stuck in limbo for a while they figure that out. You'll know what your equity or commodity is worth against another bundle of goods approximately. So you'll be able to make trades and know what you should trade it for so that you don't get ripped off. Um, but yeah, so back to gold, silver, platinum. So got all my purchases, and then I have the gold silver ratio listed, the gold platinum ratio, the silver platinum ratio, the Dow gold ratio, Dow silver ratio, Dow platinum ratio, S&P, and so on and so forth. And for oil versus those, so the oil platinum ratio, oil silver ratio, oil gold ratio, the average over, and then I do the average over a 20 or 10, 20, and 50-year time frame. So I can see what this is worth today against this and what the average is over this time. And you can tell if something's trending down, trending up, and it's just undervalued at this time. Because remember, everything goes in cycles and waves, and some cycles take a long time to complete. So there could be a bull market that is very long with minor bull or bear markets in between, or a very long bear market with bull markets in between, but the overall trend is down. So you can see the change in the ratios over that time frame. So for example, platinum has been trending down in value against gold and silver for the past 20 years. It used to be worth more than gold. Palladium kind of took over. Platinum, all the areas where it's mined kind of have some issues. So theoretically, the supply will be even further diminished in the future, and it should be more valuable, but it's possible, since it's mostly an industrial metal, that um, it'll just kind of be phased out in use. That's why I don't own much of that. It's kind of a gamble or a speculative investment a little bit. But the platinum silver ratio is very low. So the average purchase is typically I'll have to look it up, but right now it's around like 20 or 30. I don't have my paper with me, but it's it's at its low point. So my idea is I can buy platinum now and trade it for silver in the future, or gold. Not sure what I'll do, or I may not sell it at all. Might just hold on to it. But yeah, so this video kind of went off topic a bit, but it's mostly just about decoupling from the dollar. Stop thinking about things in terms of dollars and only think about things in terms of what can this good be traded for today when I bought it, and when I sell it, let me make sure I can get more of goods A, B, or C in the future. And also the idea of the flat plane. How can we design a trading system that creates a flat plane out of a basket of goods so that we know whenever a one of those goods extends beyond the acceptable range of value or the 0 point against the other goods. And that way we know if coffee or silver or gold or something goes way up beyond it, we know it's time to sell. And if it goes way below, we know it's time to buy, because these are goods that have thousands of years of track records of being needed. Silver has so many industrial uses. Gold has a lot of industrial uses, as well as um, investment, huge investment demand. Um, People love coffee. People need their meat. People need their grains. So these are goods that aren't going away, and they have a proven historical track record of price versus other goods. So it's a good thing to look at into um, how to track value over time. And the value of the dollar, you look at it on a chart and it's pitiful. It's not something you want to hold on to. It's not something you want to pass down to your children or grandchildren, because the stuff you worked for 10 hours worth when you were 20 will be worth 30 minutes of their time in the future. And they'll say, what is this crap? Thanks for the movie tickets or whatever, I don't know. But anyways, have a good night, and we will talk to you again soon. I got my best friend's getting married soon, and we've been planning on doing a joint podcast soon, and I'm really hoping to get that set up soon. That'll be really fun. So enjoy, have a good night, and we'll talk again soon. Oh man, haven't